You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time to rock out with your favorite, hopefully your favorite. It probably is the only. I don't know of any other bi-weekly option shows. If you do, let us know. We won't check them out, but it's good to know. Just kidding. My name is Mark Longo from the old Options Insider, as well as, of course, from this here Options Insider Radio Network. Glad to have you with us on this Thursday, November 8th, right around noon Central Time. You guys know, if you listen to the podcast, you can always join us live right exactly at this time, noon Central, 1 p.m. Eastern, via Mixlr. Grab that link, set it and forget it. I know a bunch of you like to do that. You like to follow us on the Mixlr, too, so you know when we go live, not just with this show, but we do a lot of stuff throughout the week. You never know who's going to come join me in the studio or remotely here and have a fun chat, or what other shows we have cooking. We have a lot on the docket all week long, so grab the Mixlr link if you want a fun surprise throughout the week, because you'll get quite a few of them. We guarantee you that. Of course, however you listen, live after the fact, hit us up with your questions, your comments, your insights. We do indeed like to hear from you guys. Excuse me. And joining me on the old program today, let's see who we got. Let's spin the old wheel. Okay, first we go out to a sleepy little hamlet known as St. Charles, where we are joined by the appropriately enough head of St. Charles Wealth Management, none other than Uncle Mike Tussaw. Uncle Mike, welcome back to the show, sir. How goes it in these bullish halcyon days, sir?
The days of the bull are back, at least for another hour. Maybe the Fed will change that. We'll see. But no, everything is well. Excited to be here on a Thursday, as always.
Got to be excited when it's OB time, sir. And also joining me from a little bit farther out, also in the hinterlands. His hinterlands are coastal adjacent as opposed to Uncle Mike's, I think, Fox River adjacent. But we are joined by the Rock Lobster, Mr. Andrew G. from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the show. How go things in the hinterlands, sir?
The hinterlands of Maine are actually really sunny today. Very, very, very sunny. Very nice. So I'm enjoying the sunshine.
I've heard rumors that the foliage season has been kind of subpar up there. Is that the case?
You know what I have to say? We just had a lot of wet weather, so there was some nice days, but it wasn't as colorful as it has been in the past. Let's say that.
Yeah, I know a lot of that region. I am an old school New Englander after all. I know a lot of that region lives on the on the visitor trade during the foliage season, the leaf peeping season, if you will. And I heard a lot of that. Right, it was too wet, not that great weather for it this year. So we shall see as we keep on going. Let's see what else. Let's see what's trading. It's time to get on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block, the portion of the show we tell you, hey, what the heck is trading? Right here in the middle of the session on November 8th, or of course, whenever you're listening after the fact. And, the crush is in, not so much today, but it really kind of came yesterday. We were talking for a while. We've been talking on this show. We've been talking on vol views for the better part of a month now. Man, there's this richness. There's this steepness. There's this bid. There's this backwardation to the VIX futures out there. And it seems kind of persistent. It seems kind of stubborn. It seems like they're saying some other shoe is going to drop somewhere. And people were pontificating at length about what could be causing that backwardation. Some might have said earnings season. Some said in particular things like Apple or others or non-farms, or take your pick. But one of the most prognosticated theories out there was that it was indeed the midterms. And spoiler alert, that turned out to be correct because, man, the vol came crashing in after the big election day here in the U.S. a few sessions ago. So yesterday we saw pretty much a big vol implosion across the board. As we're speaking right now, the markets are kind of unched today, slightly up in the Dow, kind of slightly down to mixed and all the rest. VIX cash also unched, but VIX cash kind of just taking a big break, shall we say, over the past few sessions. 1634 right now, off substantially just in the last couple of sessions. I picked the wrong week, Mr. Rock Lobster, I still faded vol aggressively in my crystal ball pick for vol views, but I bumped it. I've been edging it down every week, and this week I kind of edged it up. I edged it into I think the mid to low 18 handle, so I may have cost myself there. We shall see. In my less pessimistic on vol than usual, this is the one week that it actually came back to bite me. But we shall see. Got another 24 hours there. 1630 out in VIX cash land, and the Dow up slightly, and everything else up about 1/10 of a point or down 1/10 of a point. It's not a huge bunch of moves out there, but the big talking point really is kind of the vol crush, the vol annihilation. Mr. Rock Lobster, we'll start with you because you've been saying for a while now you didn't see anything saying that we were going to lose vol until the midterms. Then after that, it kind of all bets were off. Well, that seemed like that was the case, sir. What's your take here on the vol-apocalypse redux here? Not quite the annihilation we saw post-February in terms of vol coming in, but still pretty hefty wipeout there. VIX futures no longer backwards, sir.
No, I think we kind of I managed our vol newsletter like this, kind of along those lines. So we kind of rode our long vol into the election, and then we got rid of, 80% of it or something like that by, I think, Friday of last week, because I figured the Monday we weren't going to see much, and then added some more like little vol backspready stuff on Monday, and today the last couple days has been kind of the little bit of a payday for that stuff. I don't know. I think everybody's waiting for the Fed. Are they going to spook everybody, scare everybody? I don't know. They might. Who knows? I think, we had the elections, we had China trade wars, and we had interest rates, and the interest rates ticking away at the deficit and all that kind of stuff. And I that's still one of the three. So if it's kind of the Fed is going to keep to their telegraphed raising that the market already knows about, then we just kind of sit here and wait for Trump and Xi to sit down and have a dinner together and come up with a trade deal. So, that's what we've got. And I don't see how much is going to change with that. So, there you are. And I could see you could if everybody likes the Fed, the interest rate talk, it doesn't get too crazy, you could see a 14 VIX by, middle of next week, maybe, as we go into Thanksgiving, because we don't have any earnings. Not much is going to happen in Congress, except, I'm sure they're going to probably yell at each other some more, I guess, all the branches of government. And then, so anyway, at least so I think the next thing is just I think there might be some optimism at the end of November, and then we'll just see where all that goes, because that's when they kind of meet, possibly trade deal, possibly not. But for right now, we have a 16 VIX, and we have an SPY that has moved, 3 cents today or something? It is down 45 cents. It was green on the day at one point. And I think that's where we are. A lot of the big earnings were out. They were still pretty good. And I don't know if we're going to get the same earnings growth next year that we got this year, but I think that's where we find ourselves.
That is where we find ourselves. Uncle Mike, you must be happy. You know, the bulls seem to be back and forth, at least for now. Obviously, the market's kind of mixed today, but seem like strong bullish sentiment in the wake of the election with that one kind of big question mark event behind us. So what are you feeling now, sir, as our resident bull here, sir? What's catching your eye?
I'm just going to sell everything and become bearish. I'm so scared right now.
Okay, thanks for talking to us, sir.
No, I do feel that this is going to prove to be another buying opportunity when we had SPY around the same levels as back in January. To me, I don't think things were from an overall economy, market, earnings, and geopolitical risk, all the things that had happened when we got back down to the 260s with SPY a few weeks ago, nothing was that much worse than it was in January. So I really felt that was a time for buying. I said it on the show. We were able to protect a lot of things on the way down from the highs. We didn't protect everything. We lost money, of course, but we were able to protect a very good chunk of our gains in a lot of areas, and the things that we're hedging and the aggressive portfolio and that type of thing. Of course, the buy and hold things we lost on, just like anyone else wouldn't buy and hold at that stage. But my point is that we have some really big opportunities right now, especially with vol coming down as it is. I think that when we have lower vol coming in, that puts you in a position to where you can be a degenerate option buyer if need be, and we can go back to doing some of the things that we talked about earlier in the year. And there's a lot of cool things that can exist when we have low volatility, because after all, options do love a bull market. The other thing that I'm excited about, in some of the SKU fund, or in some of the SKUs that I've been doing that I put on maybe about 4 or 5 months ago, a lot of the higher flyer stocks that are not a lot, but a few of the high flyer stocks that I use in this, I can't mention which ones they are because my compliance would not appreciate that. But when you have a collar on to where you have SKU going, meaning the out of the money call pays for the at the money put, when you can find that SKU, that's something to where when you have a drop in vol along with a drop in the stock, that can be a powerful thing. Now, some of those stocks have gone down, and they're still down. They're still pretty significantly below the long put. But the concept for the client would be, okay, we're going to make between 0 and 3% over an 8-month period or something like that. Annualized, that's between 0 and 4% or something along those lines. And it's kind of not designed to replace a CD, but it's a way of having something relatively safe as an alternative to a money market or something like that. Of course, there's not the FDIC insurance, but we understand what collars are in the show. But here's where the benefit comes in. And this is what's happening today. I closed out a short call for 9 pennies today. And because of the SKU that we originally took in, it's still mathematically impossible for the client not to be profitable. He'll only be profitable maybe a few dollars, but he will still be profitable even though the stock went way down just because we had such a SKU on the higher priced call. Now, here's where the benefit comes in. Let's say over the course of the next 3 months that stock comes back. Now that client has unlimited upside with no downside risk, all because of the SKU that we initially put into it. And by no downside risk, I'm referring to the safety of the put option on the stock. But this is where trading SKU can really, really get to become a lot of fun. If all of a sudden these stocks do come back, they might not, who knows? But if for some reason they come back, when initially the client's expecting between 0 and 3%, and all of a sudden he's up 11%, that can be a lot of fun. And that's kind of what I'm hoping for. Go Bulls.
That is indeed what you're hoping for, because you are our degenerate bull here in the midst. It is, you're right, still earnings season. Looks like we got, what we got popping off after the bell. Excuse me, we got Disney coming off a little bit later today. Yeah, they're after the bell here. Dropbox after the bell today as well. Also Funko, makers of some fine pop vinyls and related merchandise out there. And before the bell, D.R. Horton out there today. And Discovery Media, some interesting ones already popping off out there today. But Disney and Dropbox, I know, especially the former there. Two ones you guys like to pay attention to in terms of, let's see here. You want to check out how other things have performed over the course of the week, or actually the earnings report. We got Qualcomm coming out, where they came out yesterday. I don't have the move results report, but I have the prediction report for Qualcomm. They're about 63.5. You can find all this, theoptionsinsider.com, of course, listeners from our friends over there at ORAT. So check out orats.com, ORATS.com. That's a good place to find all this data and a lot more over there as well. They closed about 63.5. They're pricing in about 221. And let's see, they actually have moved in the past, so almost $3, 290. So they're a little bit coming in a little bit under what they have expected, or what they have actually moved in the past. Let's see here. Roku was also, they're pricing in about $9.34. This is, let's see, this is not the results report either. I don't have that either. So we'll see if we can get some of that stuff up here. The earnings prediction reports, though, are up there. So we're still waiting for the results reports to be crunched. Speaking of results, we didn't ask, but people have sent us, and we've looked here as well. The people who are obviously wagering, obviously we had the big election this week. People like to wager on such things on outlets like Predict It and a few others. So we like to look at those. That's kind of analogous to what we do in the options market. We look at what data actually has to say for products, as opposed to what analysts and others have to say when it comes to some of these issues. And so what the actual money was riding on here in the U.S., again, this is a lot of this is overseas stuff, because a lot of this is illegal here in the domestic U.S. According to this Predict It, they had for the Senate, they went out, it looks like at about, this is effectively like a binary, I believe, where the price is kind of indicative of the probability. They had about 88 cents out of a dollar were bidding for the which party will control the Senate. That was for the GOP, and only 16 cents, or so about 16% for the Democrats. That pretty much turned out to be pretty much how it worked out. So not a bad wager there. Let's see the other way. There's the other way for the House, though, 71 cents, or so 71% roughly for what they were wagering, what actual dollars were wagering going into the election for the Dems, and 33% for the GOP. And that seems to, again, real money usually is a decent prognosticator out there in terms of what's cooking in the land of markets, land of elections. Go figure, whatever it is, real money usually is the best indicator. And let's speak of that real money, let's keep the ball rolling. Let's see what real money is telling us in the land of weird options trading, because it is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's do it. Time to get weird, time to get funky, time for the Odd Block. This is, of course, the portion of the show where we break down exactly that weird, wild, funky, crazy, ridiculous, some might say, paper in the world of options. And let's kick things off here, as we are wont to do, as always, in the land of crazy electric autos, aka Tesla. That stock's still around that 350 level, 352.5 right now, up about $4 and change, or about 1.25%. So actually a pretty quiet day for Tesla, all things considered, out there. But we like to look a little bit beyond, a little bit farther out, a little bit farther down. In this case, way on out to the old magical, mythical, crazy, catastrophe, downside, mystery, call them what you will, puts that light them up out there in Jan and beyond. Jan used to be a long time away when we first started looking at these. It was like, oh, wow, Jan 2019, or in the distant ether of the future. Now, only a few months away. And the Jan 50 puts continue to do some paper here. It looks like about 314 of those hitting the tape today. They're trading right around 13 to 14 cents. 68,000 of those bad boys on the open on the tape right now. So it's like some people are starting to close out those positions. There were about 75,000 as of last week. So interesting stuff over there. Let's see, the par puts doing about 63. Actually, 250 of the quarters going up today, which is, or 80 puts, I should say, which is a strike we don't see a lot of action in traditionally out. There's only 5,000 open on that strike. So not usually the go-to strike, the 80 strike for Tesla mystery put buyers. But today, that is the case. Let's go out again to Jan 2020, where sometimes saner, cooler, calmer heads prevail. Let's see if that's the case today. Let's see, the 50 puts doing not that many, 20 odd. Par puts doing 70 odd. Let's see, the par puts are trading about $8 if you're curious, listeners. And the 150 puts are where the action is today. Nearly 200 of those lighting up. Those are about $15 puts if you're curious. So people playing in the Jan 2020 150 puts, decent size, and about 7,000 open on that strike as well. Worth noting, 28,000 open on the par puts and 27,500 open on the Tesla Jan 50 puts. I have to ask you again, Mr. Rock Lobster, because it is required by law, have you guys decided to get into the Tesla put frenzy there in Carmen line, sir?
Like I said, we looked at a ratio, like a broken wing butterfly for even money, and we took it off for, I think we made like a dime on it, just because Tesla didn't get down there. It traded 250, and then Tesla has a new CEO or new chairman of the board, and apparently it's very close to an all-time high again. So who knew? So I think all these put people, remember we saw those par puts go to $3 at one point. They're down to 60 cents again. So it looks like once again, Mr. Musk has dodged a bullet.
He has. But you know who hasn't dodged bullets? Our celebutants, our special guests here on the Odd Block today. Let's see who we got. I think we got some newcomers here, which is always fun. Remember, our Eye of Sauron listeners is always scanning. As we say in Monsters, Inc., we're watching, always watching for unusual activity. So let's see what's coming up on our tape today. First off, we got a newcomer. It's Dan. Good old Dan, a.k.a. Dana Inc. Ticker symbol, like I said, Dan, D-A-N. Trading today, $15.19. Pretty much unched on the day. It's the name that does, let's see. Where can I find the average? There we go. The average volume is about 1,200 contracts a day. Today, doing nearly 2,000% more. Today, doing 22,000 and change. Of that 22,501 contracts, 65 of them are puts. So let's get into those puts, of course. No, we're going to get into the calls, of course. Listeners, if I could, again, find my options chain here. Oh, where did it go? Again, wrestling, doing the fun dance with the new... Oh, I see what happened. I popped it out. There we go. No, it's gone. So I got to bring it back up again. But if we're looking at calls in particular here, listeners, as I continue my wrestling with the new version of Live Wall. Spoiler alert, I'm not exactly enthused by this, listeners. But that's a conversation for another day. Let's go on instead to find the upside that is lighting it up here. It's all in March, listeners. In particular, what first caught our eye are the March 15 calls going up for $1.75, 4,826 times. Again, that's above the offer. They were offered at $1.65. They went up late, though, so when they got up out of sequence, you got to take some where that execution went up with a little bit of a grain of salt. The same thing here, earnings are February 13th, so distant earnings cycle for this one, but still, this can't be considered an earnings play, the March call here. Again, a distant earnings play, but c'est la vie, we've seen stranger things. But that's not all the paper we saw today. No, not by a long shot. The March 15s have put on a total of about 5,200. Worth noting is about 4,200 open on that strike, so it was close to what traded today, but there's clearly more paper going up on that strike today. Also worth noting, 3,600 of the March 16 calls also going up. Excuse me, and 12,000 and change of the March 20 calls. The weird thing is a lot of this paper is in line with the OI here, listeners. There's about 12,000 contracts open on the March 20s, about 6,000 open on the March 16s, and about 4,200. Makes me think that someone perhaps put on a bit of a vertical here with perhaps a kicker on the upside, and perhaps they are unwinding it here today. But when we do that, we like to look also at the chart to see exactly what the heck is afoot in this name. About a year ago, this thing was trading $21, almost $22. And it got as high, let's see, as actually $27 looks like here. Again, let me pop out this chart. It's way too small so I can see exactly what the heck we're talking about here in a little bit more detail if my system will play ball with me. There we go. All right. So it actually was trading, about, looks like $30 and change, and then got as high as 35 and change back in the Jan-Feb timeframe. That's kind of been slowly coming on the downside pretty much ever since. So it's kind of been a long, slow death watch here for Dan. But apparently it looks like someone perhaps was looking for a little bit more upside and then decided against it. Maybe prepping for a big pop here. Let's see if I can look really quickly on when this March was initially opened. Let us see, listeners. Oh, so yeah, it's pretty much the OI going up recently. Yeah, this is some recent addition. So maybe this is kind of piling on, or either that or they're getting the heck out of Dodge. Mr. Rock Lobster, a bit of a weird one here. Weird name as well, Dana Inc. I'll have to look up, see what the heck it is they do while you're talking. But what's your feeling here? You think they're opening and then immediately closing, and they piling in? What's cooking here?
I don't know with this one. I'm trying to figure out. I'm looking at the open interest versus the volume. It I mean, when it looks like a duck and walks like a duck, it looks like they're just closing out a position. I don't see. I mean, it
does have that feeling, doesn't it?
Yeah, but like it's kind of a goofy one. Like, what do they? What did they accomplish through all of this?
They really love their broker.
This is one of those trades where somebody had this great idea for a three-way trade, and I love it when I can't figure out what a trade is, because it's not that I know everything about options, but I've been around options a little bit, and then when I can't figure out what the trade is, how somebody can make money on it, I always find that. So this one is, I mean, the stock has moved around. I mean, it's moving around like a little bit, but it's kind of like a one-way freight train down. So, somebody doing a little bit of a little bottom fishing, but I just can't figure out how they make. Sorry, I just can't figure out how they make money with it. That's all. when
you and I can't figure it out, it's a sign that usually of a very well constructed, well thought out, and well analyzed trade. By the way, listeners,
three-way stupid.
Yeah, there we go. With extra stupid on the upside, super stupid.
But then they're out, right? So they're out right now.
Apparently, they love their brokers enough to put it on and take it off. By the way, if you're wondering, listeners, Dana Incorporated is formerly Dana Holding Corporation, a global provider of technology, driveline, sealing, and thermal management products. So there you go. Hopefully that explains it all to you, what the heck this company actually does. Let's move on to another one. Got a lot of weirdos on the odd block. Hey, it's called the odd block, right? Next up, we got ctrip.com. Oh, sorry, ctrip.com International. Ticker symbol CTRP. This is a travel service provider for corporate travel management in China. Ticker symbol, like I said, CTRP. They're trading today 28.33. They're taking a beating off six handles, or about nearly 18%. This is the name that does about 9,300 contracts a day. So that's actually not bad volume for an odd block candidate. Today doing 21,000, so about almost 2.5 times their typical ADV. Excuse me. And the volume actually breaks down pretty close, not quite 1-to-1, but pretty close to it here, calls and puts, which is interesting given the one-sided nature of the underlying flow. You don't usually see that, listeners. Let's go out here and see what caught our eye amidst our ever-scanning eye of Sauron here. And we found, what do we got? Oh, all the way out to Jan 2020. We're playing a little bit of the long game here today, listeners. Jan 2020 double calls, a.k.a. the 55 calls, lighting it up to the tune of a whopping 3,000 for 55 cents. This is right on the offer. They were pretty much 40 cents at 55. Someone said, yes, I will take those for 55 cents. Trace 1,000 times. This is Jan 2020, so this has all the earning cycles in for quite the foreseeable future. There's things are still at 55 cents out. If you want to get some more, listeners, have at it. Now's your chance, even though the stock's off quite a bit. Again, this is opening paper because there's only about 1,500 open on this strike. So let's go out here now, and let's see once again if I can go to my charting module, if it will play ball with me. Here we go. Stock chart. Yes, thank you. I would like to do this again. Yes, thank you. There we go. Let's put in a ticker and see what we can. Here we go. It's CTRP. That's the ticker I want. That's what I'm talking about. Here we go. All right. This song and dance is going to continue. I got a feeling, listeners. Let's see. A year ago, this thing was trading. Let's see. It looks like about 41 and change, almost 42. Got as high as nearly $50, about 49. Back again in looks like August. What is this? What are they showing me here? This is 6 months. I don't want that. I want 1 year. Stupid chart. Here we go. All right. 45 and change a year ago. Got as high as about 48. Again, back in looks like about June of last year. Then kind of selling off a little bit here now. So it's kind of been another inexorable decline here for this one as well. Mr. Rock Lobster, this seems like kind of like what it looks like on paper. Someone looking for some open and upside. This thing's got a rip, though. I mean, it has some time to do it, but it's got to pretty much double for these calls to start playing. I don't know. This thing was higher a year ago, but wasn't quite 55. What are you thinking on this? This guy betting on a pretty strong reversal, looks like here, in everyone's favorite, ctrip.com International Limited.
Is this the Chinese version of Priceline?
It might be. Isn't there a Chinese version of everything? Isn't that a joke on Silicon Valley? A guy that goes back to China and makes China Facebook, China Google, all that stuff.
All right. I think so. So far I think it's worked.
Yeah, I'm not mocking it. It works.
I think again this one is. I think they're just looking for a trip back to the 50s. So. I mean, the stock was what? I mean, in August, it was $52. So I think they're maybe hoping against hope after the big markdown in that thing today. So that's all I could say on that one.
Well, if that's all you can say, let's keep on rolling then into our final name. A lot of newcomers here. Again, the Eye of Sauron going deep today, listeners. Not a huge amount of volume lighting up the old tape today, so we're going deep, we're going dark, to the dark recesses of the options world. I think this might be a record. 3 newcomers. This next one here is Cornerstone OnDemand, ticker symbol CSOD, CSOD, trading today $52.72, up about $1.60 or about a little over 3.25% or so. The Cornerstone OnDemand is a cloud computing company. There you go. That's all you need to know. It's work in the cloud. Who knows what they do in the cloud? Finance, logistics, who knows? But, they're a learning and human capital management platform as well. Delivered as a software as a service. I love these descriptions. These are they're the worst things ever. That's a conversation for another day. Let's keep on rolling into what the heck's going on. This name, by the way, if you're wondering, because I was, they average about 233 contracts a day. Today, doing a little bit more than that, to the tune of 4,616. So quite nearly 2,000% of their ADV going up on a fine day like today. And where was all this paper? Again, we're going out. We're going out a little bit here today, listeners. In particular, it's the Feb 62 halves, lighting it up to the tune of 2,750. So over 10x their ADV in that one print. The Feb 62 halves going up again on the offer. For, or close to it actually, not quite lifting the offer, for $1.20, nearly 3,000 times. This is opening OI only about a couple hundred contracts. As the day has gone on, another 250 piling in, so another ADV's worth of volume piling in, making the grand total. And even, you see some good even numbers today, Mr. Rock Lobster. Even 3,000 on the tape here. Let's go, if my chart will play ball with me thrice. I'm rolling the dice here for the third time, Mr. Rock Lobster. See if I can get it to roll. Here we go. Chart here. A year ago, it was trading what looks like, this is such a confusing chart, 34.5. For some reason, it's also showing me 39. I don't know what that is. 34.5 is, I believe, where they were about a year ago. And they got all the way up to, 57.25 not too long ago, back in September 26th, actually. So not too long ago, they were trading a wee bit higher. They've kind of been trending lower. They've kind of been vacillating around this level where they are here right now. So Mr. Rock Lobster, this one seems like it's kind of like what the other one was as well. A little bit of longer term. I say Feb sounds like long term. It isn't that far away anymore, but a little bit of longer term upside call love. This not quite needing to double this time, but it needs to get a nice little lift up to 62.5. Is that what you're feeling as well, or is there something else afoot here in our upside call love for Cornerstone OnDemand Inc.?
Cornerstone. You really picked some names today. I have to say,
the Eye of Sauron never sleeps, sir.
You went out and you found the weirdest stuff you could find.
That's the fun. And I make us do it live. No prep. We got to read it all live so the listeners can see. It's like a little bit of live theater, how it works. The magic behind the scenes, sir. Pay no attention to the man behind the curtain.
Pay no attention to the man behind. So, I'm looking at this one and thinking, well, maybe somebody is trying to maybe a little upside in here. They're looking at the possibility of a bit of a move. That's the only thing I could see with this one. You know what it is? It's like people are starting to do a little fishing. Market pulled back, so now they are jumping in with both hands and buying some calls and looking for a little bit of that retracement love that call buyers like. So. Not, this stock could make the move back, but it's pretty darn bullish. I got to be honest with you. Pretty darn bullish.
Got some bulls out in force. So that could be our theme for today. Upside call bulls out in force in some obscure names today. 3 newcomers, 3 up, 3 down, 3 newcomers here in the odd block. Don't say that too often. Meanwhile, it's Thursday. It's time for you guys to dance with us. Time to join the party. It is time to open up the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, listeners, let's do it. Let's do some mail blocking. We like to kick this off every week. We ask you guys questions a lot here, too. We asked you a couple this week. It was kind of a busy week for questions. We had a quick flash poll, remember, from our last episodes. Let's play that off. That was a really kind of brief one. Everyone was on the tip about the Apple downgrades. Let's see right now. Good old Apple trading 207.86, so getting back some of its luster north of that 200 level. It's still off about 2 handles today, though, so not a great day today. But we asked you. At the time, it was south of 200. Everyone was worrying, hand-wringing. Oh, my God, the end of Apple. Heresy, downgrades in Apple. Who could think of such a thing? Yet there were multiple ones coming out earlier this week. So we asked you guys a little flash poll. Are you guys part of that Apple faithful? Or do you have your claws out at the beer time? Do you think Apple, quite simply a year from now, will be above or below 200? And dramatically, 72% of you saying yes, above 200. 15% saying nope. 13% saying, yeah, I'm sick of the fruit company. I get you. I feel your pain. But you know what? Still is a dominant name, so we have to talk about it. It's kind of required by law, listeners. Let's go on to what else we asked you. Our real question of the week, the one that's still running if you haven't played at Options on Twitter, listeners, to make your voice heard. And this week we asked you, we like to do this like a few times a year or so to get your pulse. This time we're asking you, quite frankly, just checking in on your favorite kind of go-to bits of strategery. So if you have a favorite, we gave you 4 choices. If you don't see yours, write in with your suggestions out there for what it is you guys like to do. Gave you 4 choices. Butterflies, your covered call / short put. Again, if you don't know why those are on the same link, maybe check out some of our educational programming. Verticals could be call or put. We don't judge. And we don't even get into like ratios. I guess you can lump all that in there. And then, or calendars / diagonals. You guys had a chance to vote earlier this week. I'm curious if you've amended your voting, Mr. Uncle Mike. I believe you went with the covered call last time. Is that still your pick, sir?
That's my pick. Yeah, I'll stick with that for now, but just want to reiterate, I am a take what the market gives you kind of guy, so I kind of view option trading from a football sense. If they're putting 10 guys on the line of scrimmage, we're not going to try and run against that. It just ain't going to work. But if I had to pick one, I'll go with the covered call. Why not? I'm
running against that, baby. I could do it. There's still only one guy in the backfield. I can break through that. That's nothing.
Oh, easily.
Mr. Rocklops, I believe you were, I think you might have been the covered call range as well. Is that still your pick for the audience, sir?
I have to say covered call. I still think that's the covered call, but I think for me that's what it would be, or the synthetic put or selling a put. But I think they're debit spreads. Debits, they're vertical spreads, the audience.
Well, you are correct, sir. The audience, it's still pretty robust here. Almost a week. We got a couple days left here on this one, but just ticked under 50%. Now at 49% during the show here for verticals. Call or put. Again, we don't judge. We don't get into ratios. Verticals covers a lot of territory, so that could be why it's dominating here. But you guys love your verticals to the tune. Don't even say buying or selling. Just whatever your pick. Take your pick. Verticals, 49%. 22% for calendar/diagonals. Doing a little better than I thought. Those are usually a little bit more advanced type techniques. 15%, only 15% for the covered call/short. But I thought that would be number one with a bullet, quite frankly. And so a little bit of surprising results here. And then 14%, number 4, for the old fly. So no love for the fly, Mr. Rocklobster. I know that's one of your favorites. Does that make you weep silently to yourself, sir?
No, that actually is good. That's maybe why flies still work okay.
Because the masses aren't doing them, so they leave them to you. That's what you're saying?
Something like that, yes, I have to say.
All right, let's see what we got. Speaking of things that come to you, Mr. Rocklobster, our first question, I believe, is for you. Comes from NVD2. That's a good handle. I don't know what it means, but hey, NVD2. NVD1 was clearly taken. He says, are we now out of the danger zone? And he also wants to know, just for his own edification, where does the danger zone officially start? So, Mr. Rocklobster, first, are we officially out of the danger zone? And then B, what is the demarcation? What is the Mason-Dixon line for the danger zone, if you will, sir?
Right. We are out of the danger zone, and that's 24 vol and higher in VIX. So we'll call it the sleepy zone is 9 to 12 VIX. Zone 2 is 13 to 17. Zone 3 is 18 to 23. And 24 and higher is zone 4. And that is the danger zone. Which, of course, will have to be the danger zone.
Yeah, so it'll have to be the danger. So we're out of that zone, and now we're in the kind of not so sexy zone, I suppose.
We're in zone 2.
Not quite very white.
It's the interesting one for VX, the vol products, because this is where they really can move here. So, but yes, that's where we are. We're right in the kind of SPX moving 1% a day, and it's not doing that today. Although it seems like maybe people are freaking out on the Fed a little bit, but
that's a good corollary to that. Maybe you should add an amendum to your VIX zones and have like an erosionator zone, because you're right. As you get lower in that, you're going to see some nice juice coming out of that, things like VXX. So maybe that's a corollary. Like you have like the low tide alerts and things like that, beach erosion. You can have a VXX erosion indicator, erosion zones. How about that, huh? See, I'm giving you gold here, sir.
The slack zone. The zone of the tidal erosion zone.
The predictably crappy crapinator zone.
Right. So, although the VXX was crapping out earlier today, and it's perking back to even, so I might have a chance to reload some of this crappy VXX trade ideas. So it's pulled back about
look, it's at 32
almost
now.
$1 from its lows.
Yeah, it was flirting with the 30 hand. I would like the nice little. I got enough little VXX juice going for now. I'm good. But it has been a fun one to watch out there. Let's go. Speaking of fun ones to watch, Uncle Mike, there's a question for you. A lot of egalitarian questions on the show today. Uncle Mike, Helio wants to know, Unvul. I'm gonna call you Unvul Mike from now on. Unvul Mike, is Unvul Mike back in full bull mode? And he also wants to know, what is your biggest holding? So 2 questions for you, sir. First off, are you back in Raging Cajun bull mode? And then what are you slinging over there?
Well, in terms of being in full-blown bull mode, I'm always in full-blown bull mode from the standpoint that my view is as a long-term bull. but I'm always short-term cautious. So it's kind of tricky with how it is. So there are times to where I'm very bullish. However, if I'm really up on trades for the year, I'm going to pull money off the table because even though I'm bullish and my indicators make me bullish, I don't want to be stupid and take a good year and make it into a bad year, so to speak. However, there's times that maybe the market's gone against me, and then I want to continue to have exposure, and I would adjust accordingly. So I am always bullish in some way, shape, or form because we have had a 100-year bull market. However, I'm always cautious, even just as much as I am bullish. It's a very fine line that I have to walk to survive. If I'm not bullish, then I'm just going to be on the sidelines all the time. But if I'm not cautious while being bullish, then unless I just get ultra lucky, I'm not going to have a job really quickly, and I'm going to have a lot of clients suing me, most likely. So to answer the question, in the short term, yeah, I felt this has been a buying opportunity from all the way down from the mid-270s down to the low 260s. So yes, definitely bullish in full-blown bull mode, but once again, it's really not saying much. I always am. In terms of my biggest holding, I'm an SPY guy. For the most part, what I do is SPY. Now, I do assist in other trading portfolios in terms of our strategic night, our triple income, and things like that. But what I do with that, we work as a team, but my role on the team is to be the option guy, meaning this is the call I think that would make the most sense to sell on this specific stock. And in terms of how that would work, George and Chris, those guys are stock guys, so to speak. They do a great job. They've been doing it for many years. We have a track record, and but we let them do what they do. And then what I do is I select the option, and then we work together. We get heated. We fight. They're saying, why do you want to take in all that premium? You're giving up our upside. And I always say, why do you want not taking all that premium? So we have our heated discussions, but we've been getting along for many years. It's a very healthy mix, and that's how we roll.
And I guess you can also read that as what's your biggest options position. So I'm guessing either protective verticals on SPY or covered calls, or maybe on SPY, or maybe both.
Yeah, definitely. Whatever. Right now, options on SPY. I can't really disclose exact options. My compliance department has had a talk with me on doing that recently, but I'll just say options on SPY.
Yeah, you don't don't have to give us months and strikes. I'm just saying in general. I kind of figured it was something along those lines. Here's another one. I think this one's from me here. It's from Ilya. Ilya wants to know, why is the iron condor the iron fly for cowards? I don't get it. I've said that a lot. That actually comes from my old buddy. I think I first heard it from my old buddy Don Schlesinger from Ballview's Land, who used to throw that. He had a lot of good chestnuts out there. Options are for selling or not selling. And one of his other favorite quotes was, iron condor is an iron fly for cowards. I love it. It just cracks me up. It encapsulates Don in so perfectly in one quick statement. If you know what I'm talking about, listeners, go check out some of the archives of Vol Views. Maybe we'll bring some of those back up. Maybe now those guys are rolling around again, maybe we'll have to bring good old Don back on for a little catch-up over there. But yeah, the gist of this really is, if you look at the two positions, listeners, I've always said I'm more of an iron fly guy. What the iron fly does is, you're going to be usually selling at the money or buying an at the money straddle, and then you're going to be selling the wings against it or selling the strangle against it if you're buying the straddle, or vice versa. If you're selling the straddle, you're going to be buying the strangle against it. So it's effectively 3 strikes. And what it is just getting right at the fire, right at the meatiest, craziest, most erosion-sensitive part of the strike chain, which is usually front month at the money or some month at the money there. So it's going to be the most expensive in terms of straddle, but also it's going to move around a lot. It's going to have a lot of decay, a lot of things you kind of want or maybe don't want, depending on how you're doing it. If you're selling it, obviously you don't want it to move a lot. And then you're hedging directly right outside of that. So you're kind of playing directly right on the fire, as I like to say. The iron condor is a little bit removed. It's kind of one step removed from that, right? It's not an at-the-money straddle. It's instead now an around the at-the-money strangle, buying or selling, and then whatever you're doing, you're flipping the other side of it beyond that, right? So you're doing another farther out-of-the-money strangle against it. So if you're buying that near out-of-the-money strangle, then you're selling that farther out-of-the-money strangle to hedge yourself, and vice versa if you're selling it, obviously. And you can see right there why it's deemed to be for cowards because it's farther away from the at-the-money. So you don't quite have an at-the-money straddle. Now you have an out-of-the-money strangle, which is going to be cheaper, which is why it's attractive to people who like to buy these things. It's less of an outlay up front, but also it's not going to move as much, right? Because it doesn't have all the same things you have. It's also not going to decay quite as rapidly as an at-the-money straddle is. So there's pros and cons to both, but because the Iron Condor is a little bit insulated from that initial shock, that initial movement, that initial flow of decay that's going on that at-the-money strike, that's why people jokingly refer to it. It cracks me up. That's why I like to say it, is that jokingly refer to it, only maybe half jokingly refer to it as an Iron Condor for cowards. But go with whatever you're comfortable with. If you like Iron Condors, go for it. Just because I roundly mock it doesn't mean you can't do it. I'm just kidding. I just like saying that because it's kind of fun. All right, here. Mark Brandt writes in all the time. He's on this Snap warpath here. He sent this in the chat. He sold Snap 45-day at-the-money puts when it had the highest at-the-money implied volatility of any stock. Any stock. Wow. I haven't done the research to see if that's to verify that. I'll take his word for it. At-the-money implied vol is the one to watch for premium selling, in my opinion. Let's see, Snap's still hovering around that 7 handle. He's been blasting away, I know, for a while at that 7 handle. He kind of loves that. Let's see here if I can get my chart to play ball with me today. It's at 705 today, off 2%, right pretty much exactly at that 7 handle. And in the last few months, where has Snap? It's got up to 12. It was up to 12. It's kind of been in a long, slow death spiral. Looks like did it get to, what is this here? 701, 579, looks like it actually very briefly here. 586 back in October, about a month ago, actually. So it did get well south of that 7 handle. So that could be a little bit risky right now. It has retraced some of that level out there. Let's see. Right now, implied vol, 30-day implied vol is 52.5 out there in Snaps. I don't quite know if that's the highest of any stock. I'm going to wager no, but it certainly seems pretty rich. 20-day historical vol, actually 10-day historical vol is almost 100. So there's some juice to be found out there. But that's a broader question, is maybe worth discussing. When you're selling puts, well, you're selling at-the-money puts, so I guess the at-the-money vol is where you'd look. Usually if you're selling puts, you want to look at the vol in the put wing, and also at the money, obviously, but the put wing is also that's where you're playing. I don't know. Mr. Rock Lobster, do you find it the most important to watch at-the-money vol when you're selling premium?
Well, what you're trying to do is, when you're selling at-the-money premium, let me see. Okay, so, oh my gosh, so many questions here. What vol do you want to sell? So I look at selling at-the-money volatility is, you're just kind of buying the stock for a discount. If you're selling the puts, that's a good indicator, but ultimately, you are taking a percentage of the equity value, and you're just converting that by selling the put. It's a directional play. It's not a instant win. And to collect, you got to wait it out. So, but sometimes it can be a great way to get into a stock, because you could get into the stock literally for, selling the at the money for 10% of the premium of the underlying, or more, depending on what it is. So, that IV at the money is, to me, the market's best guess for the performance of the underlying from the day you put it on till the day that term expires. So if you're trying to figure out what the market thinks about the range of a potential stock, you look at the straddle. You want to see how much the SPY can move in a week, look at the implied vol of the straddle. And that will give you a really good sense of what the market's doing. We're doing a weekly class this weekend, and that's what I tell people. People have, okay, I think the stock's going to do this, and right now the market is pricing only this much of a move. So it gives you a pretty good statistical idea of where things are going to go. So at the money IV, if you want the range of the stock for the time to expiration, that's where you look.
Yep. Well, looks like Mark is listening today too. He says, Snap is great. Well, there you go. You're selling puts on it. I guess you want some upside. You want some nice vol crush. I'm glad to hear that it's working out for you. I know you've been blasting out in there for a while there. So I'm glad it's working out for you. Speaking of working out, let's see what's working out for us. At least what we're paying attention to work out for us. Easy for me to say. As we're going on into the weekend in our Around the Block segment.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. I mentioned we got a slew of earnings coming up here. Just even this afternoon, if you forgot the big ones, of course, going to be Disney and maybe a little bit of Dropbox juice coming out there as well. And also a little Funko. Why not? Why not a little pop vinyl love? I don't know where Funko is trading. I will look them up while Mr. Uncle Mike regales us with what he's watching for the rest of the week into the weekend, sir.
I think the main thing is the Fed announcement right now. I don't think it's going to be a huge thing. I don't think we're going to have any surprises, but I think that's one that could be a surprise, but I don't think it will be. Just kind of curious to see how the market reacts to it after the rallies with which they have it has had. So watching that along with some of the other things with which you mentioned.
In case you're curious, listeners, Funko trading $20.50, off about 2% today. So a little bit of a bearish day for the pop culture phenomenon known as Funko Inc. Mr. Rock Lobster, why are you paying attention to Funko? What else is on your radar, sir? Your VXX Erosionator, is that what's coming next?
The VXX Erosionator. How the market reacts to the Fed. Maybe a couple more earnings down the road. Can we get a trade deal? And we've got Thanksgiving coming up. Let's see if VIX can hold the 16 level. I think it might be hard if we don't really start to see any action or that's kind of it. I mean, we've had the elections, at this point we're just sort of waiting with the interest rate, once the interest rate picture gets squared away, then everybody sits around and sort of contemplates their navel again till Thanksgiving or after Thanksgiving.
We can all do with a little navel gazing these days. We had enough tumult. Let's let the vol quiet down. Let's let that erosion kick in. And then it'll be a happy turkey day for all and sundry. Listeners, that music means we got to wrap it up here. But before we go back around the horn, let's start with ye old Uncle Mike. Sir, what is cooking in the land of St. Charles Wealth Management, sir?
We are broadcasting live 1 week from tonight at my office, 303 East Main in St. Charles. What the heck do I do now? Markets come down a little bit. What do we do with this pullback? Do we buy? Do we sell? What are some things we can do? We will be having option traders in my office. We are excited about it. So if you are in the neighborhood in St. Charles, stop on by. For more information, feel free to contact me, Mike Tusaw at stcharleswealth.com, or visit my wealth website at www.stcharleswealth.com.
You say you're broadcasting it? People can listen to it if they're not going to be live in the room?
I guess I misspoke on that. We will be broadcasting live from the standpoint that it's live.
If you're in person, it is broadcast live directly to you.
That is correct.
I see what you got. All right, stcharleswealth.com to learn more. Click on the Fox. It does cool stuff. All right. And also, I'm going to keep plugging that until it exists, Uncle Mike. And also, Mr. Rock Lobster, do you have a cool Fox? And if I click on it, what does it do?
No, we have our Saturday class this Saturday. Understand short-term options, how to price, similar to how I described. Look for trades and ideas that you can actually have a shot at making some money with. That will be happening this Saturday. Go to optionpit.com and click events. You click that, and we will eventify you.
Ooh, eventify. I like it. We're creating new verbs. If you want to be eventified yourself, head on over to optionpit.com for your eventification. And speaking of eventification, if you want more events, if you're not tired of my voice and you'd like a whole gaggle of others to join me, and you like talking more volatility in equities, but also maybe some metals, other cool stuff, well then take a little break, get some beverages. We'll be back in about exactly 30 minutes in the live stream. If you're listening on the podcast, then just listen to the next show. It should be right there for you. But we'll be back in exactly 30 minutes doing a deep dive into some cool metal stuff as well as other stuff, volatility, skew, all that fun action coming up with me and a whole gaggle of others coming up soon on TWIFO, so stay tuned for that. Otherwise, we'll see you, actually won't see you on Monday because the markets are closed, I believe. But we'll see you back here next Thursday for more of the Option Block.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.